Assalamualaikum and a very good morning. So today we are going to go to another topic known as MFRS110. Now MFRS110 is about events after reporting date. Okay, so this topic covers events that occur after the financial reporting date. So what we're going to learn is today is we're going to look into what is the definition of events after reporting date. And we're also going to look at the recognition of events of after reporting date, and finally we are going to measure the events of after reporting date. Alright, so we begin with the definition of MFRS 110, which is related to both favorable and unfavorable events that occur between the end of the retained profit or the year end and the date of the financial statements authorized for issue. Okay, what this means is that if let's say that a company's accounting year end is 31st December, all right, so between 31st December of a particular year and a period about 2 to 3 months after the financial accounting year ends for that particular year, then normally what will happen is that the directors will authorize for the financial statements to be issued after it has been checked and audited. Alright, so if let's say that your accounting year ends at 31st December 2015, alright, so normally the directors would ask the company to issue their financial statements around 31st March 2016. So within those 3 months, right, from 31st December 2015 up to 31st March 2016, there may be events that occur that is supposed to be in 2015 but has only known in 2016. Okay. So in order to give a better illustration, explanation or understanding on this definition of MFRS 110, we'll look at illustration number 1. Okay. The management of an entity completes draft financial statements for the year to 31st December 2001 on 28 February 2002. Right? And upon review on 18 March 2002, the board of directors has authorized the company to issue the financial statements, and subsequently they also announced the profit and selected other information on 19 March 2002, and this financial statement was made available to the shareholders on 1st April 2002. So the shareholders approved the financial statements at their annual meeting on 15 May 2002, and the approved financial statements are then filed with the regulatory body on 17 May 2002. Alright, so at which point is the date of the issuance of the financial statements? So if you could call back, even though the financial statements is prepared for 31st December 2001, for the year ended 31st December 2001, now the directors has only authorized for issue on 18 March 2002. Therefore, the period where the events after reporting date may occur would be between 31st December 2001 up to 18 March 2002. So any events occurring between those within those 3 months, those are considered as events after reporting date. So there are two types of events after reporting date. One is known as adjusting events. The other one is known as non-adjusting events. So what is the difference between adjusting events and non-adjusting events? Right? So adjusting events are events that occur that provide evidence of the condition that exists at the end of the year end. Alright? So meaning that this kind of events will affect the materiality of the financial statements and therefore may need some adjustment. Right? On the other hand, non-adjusting events are indicative of conditions that arise after the year end. Alright, so consider to the term here, non-adjusting. So even though these events happen within the period after the financial year end, to the period before the directors issued the financial statements, it may not need to be adjusted. Okay. So we're going to look into detail one by on the types of the events. Right. So let's look at the adjusting events. All right. Now, if it's an adjusting event, all right. Now this event should be recognized in the financial statements. All right. And should adjust the amounts recognized in the financial statements to reflect the adjusting events. Okay, so this event occur between the end of a reporting period and the date when the financial statements are authorized for issue. Okay, so there are many examples of events, adjusting events. All right, so among them are settlement after reporting period of a court case that confirms that the entity had a present obligation at the end of the reporting period. Right? For example, if the company is being sued for negligence or for any wrongdoings, all right, and the court has decided that, has ruled that the company has to pay out at the end of the reporting period. Okay, now the settlement has only arisen probably perhaps in January or February, that is between the financial year end to the date before the directors issued authorized for the issuance of the financial statements, then that settlement is considered as an adjusting event, right? Because we already know that the company has to pay the court settlement before the financial year end. Okay. Another example is if receipt of information after reporting date, that receipt of information after reporting date that assets at reporting date was impaired. Alright, for example, after the reporting, after the year end, we receive information that one of our trade debtors has gone bankrupt. Right, so the bankruptcy of customer occurs after reporting date will need to be adjusted. Right, because these customers has appeared in our financial year end as at 31st December. So if information received after 31st December, but before the directors authorize the issuance of the financial statements, that information need to be taken into account as part of adjusting event. Okay. After the reporting period, the entity sold inventories at reporting date at the price lower than its cost. All right. For example, at year end, normally we have one asset known as inventory, which is recorded in our current asset. So, and that value is normally recorded at either at lower of cost or net realizable value based on MFRS110. Right? However, let's say for example, when we record the inventory at year end, it is recorded at cost, right? And then after the reporting date, that is after the financial year end, we found out that the entity sold the inventories lower than its cost, then that adjustment need to be, that the difference of the price between the selling price and the cost recorded in the inventory should be recorded, should be adjusted as part of adjusting events. Okay. Now another example is asset purchase or sold before the end of the reporting period, but its cost can only be determined after reporting date. Okay, let's say that towards the end of the financial year end, the company decided to sell an asset to another company, but they have not decided the value or the amount that should be sold to the other company. So probably because they couldn't determine yet at that time, because they are still waiting for the valuation reports or information that needs to be considered in determining the cost of the asset that is going to be disposed. So in that case, after the reporting period, once the value of the asset has been determined, then that value should be accounted into as adjusting events. Okay. Now another example is determination of bonus related to current year after reporting date. Alright, so normally bonus is being declared by a company once they have prepared the financial statements, right? Because we need to determine, when we prepare the financial statements, we need to determine whether the company is gaining profit or loss. So company will normally give bonuses or dividends to their shareholders once they have obtained a profit, right? So in that case, the bonus can only be determined after the financial year end, that is at 31st December 2010, for example, right? So in that case, the amount of bonus declared should be accounted for as an adjusting event. Okay, now our last example is discovery after reporting period of fraud or errors that shows financial statements incorrect. Alright, so after preparation of the financial statements, we found out that there has been fraud or errors that occur. Alright, so that may lead to our financial statements being misleading the shareholders. Now in that case, the amount of fraud or errors determined by the company should be adjusted as an adjusting events. We have gone through the adjusting events. Now let's look at non-adjusting events. Okay. Now, if you can recall, adjusting events are events that need to be adjusted. Okay, need to be taken into account to our previous financial year end in order to present a more reliable and true value of the financial statements. Alright. Now for non-adjusting events, it's the other way around, where even though this event arises, but we do not need to adjust the event. Right? So the entity shall not recognize non-adjusting events. Okay? So what is non-adjusting events is when the events occur between the end of reporting period and the date when the financial statements are authorized to issue. Right? So let's say, for example, if a company prepare its financial year end at 31st December 2015 and the directors or the financial statements are authorized for issue on 31st March 2016, meaning that the events that occur between 1st January 2016 up to 31st March 2016 can be non-adjusting events. Alright, for example, a decline in market value of the investment. Alright, so when we record our investment based on MFRS139, okay, if it's a simple investment, alright, we will normally record the value at cost. Alright, and in the notes to accounts, we will record the investment at cost and at market price. Alright, we do not need to adjust for the amount that appear in the financial statements. So let's say, for example, now we have recorded it at cost, but we found out that there is a decline in the value of the investment. Alright, so we do not need to adjust anything in our financial statements, alright, because it is considered as a non-adjusting event. Okay. Now another example is if the company has gone through into a major business combination. Alright, so business combination can be acquisition of a subsidiary. So in this case, we do not need to prepare or not need to adjust for the non-adjusting events. One of the reasons is because if it's related to acquisition of subsidiary, then they will prepare a different set of financial statements. Okay. Now another example is announcing a plan to discontinue operations or restructuring. Right, so if a company is facing some difficulties in managing the business or decided to discontinue an operation or doing a restructuring of an operation, then that is considered as a non-adjusting event. So we do not need to adjust the figures in the financial statements. However, we do need to disclose it in the notes to accounts. Okay. Now, another example is destruction of a major production plant by fire or flood. Right? Now, in this case, because it's involved destruction of a major production plant, it is not occurring yet. So, we do not need to adjust this particular event, right? Because it is considered as a non-adjusting event. Okay. Another example is a major share transaction. Okay. Major share transaction is also not considered as a non-adjusting, is also considered as non-adjusting events. And then we have abnormal significant fluctuate of forex, as well as entering into significant commitments or contingent liabilities such as issuance of corporate guarantees. So all these are considered as non-adjusting events, so we don't need to do anything. However, we may need to record it in the notes to accounts. Now the next type of event we can have is about dividends, right? Now when it relates to dividend, like I mentioned just now, normally the company will declare dividend after determining the profit of the company. So if it's profit, if the company gains profit, so most likely the company will declare dividend to the shareholders. Alright. Now if the company declare the dividend after the reporting period, then this entity has to recognize the declared dividend as a liability at the end of the reporting date. Okay. As to recognize. However, they should not recognize it as a liability, but to disclose it to the notes to the accounts. Alright. For dividend, as I mentioned before, in particular to dividend, a company may declare the dividend after the financial reporting period. Now, if the company declare the dividend after the reporting period, what they need to do is they disclose it to the notes to the accounts. They do not need to recognize this dividend as a liability in the financial reporting period, but they do need to disclose it as a liability in the next financial reporting period, right, as dividend payable. Okay, let's look at illustration number 2. On 1st March 2001, an entity financial statement for the year ended 31st December 2000 were authorized for issue. On 28 February 2001, the entity declared a final dividend of 100,000 in respect of profits earned in the year ended 31st December 2010. Alright, so if you can see here, even though the financial year end, the company's financial year end is at 31st December 2010, however, the authorized for issue on the financial statement is on 1st March 2001. And in between 31st December 2000 and 1st March 2001, the company declared a final dividend of 100,000 in respect of the profits earned for 31st December 2010. Okay, so the declaration of the dividend was made between the after the financial year end up to before the directors issue the authorized for issue of the financial statements. But because this is dividend, we cannot consider this as an adjusting event, because it is a non-adjusting event that occur after the reporting period. So we do not need to declare or to take into account this dividend as a liability in the previous accounting period. However, we are going to declare, or we are going to take into account the dividend declared as a liability in the future accounting period. Alright, so for the previous accounting period, as at 31st December 2010, what we're not going to do is we are going to record in the notes to accounts that there is a dividend payable that has been proposed, has been declared by the company. So dividend do not meet the criteria for recognition as a liability until they are appropriately authorized and are no longer at the discretion of the entity. Right? So it becomes a dividend payable at the next accounting period. Okay. Now if you look at illustration number 3, Atlas Berhad is a company engaged in manufacturing electrical goods. The financial statements of Atlas Berhad are authorized for issue on 12th March 2014. The following situation relate to Atlas Berhad for the year ended 31st December 2013. Alright, so the events after reporting period would be between 31st December 2013 up to 12th March 2014. Okay. So they ask us to identify whether the following statements relates to events, not adjusting events or non-adjusting events. Right? So if you look at information number 1, on 2nd January 2014, a flood has destroyed one of the warehouses owned by the owned by the company, that is Atlas Berhad, the loss is estimated at 2 million. Now, if you can still recall the difference between adjusting events and non-adjusting events, you can see that for the first transaction is a non-adjusting event, right? They do not need to adjust that in the financial statements of 2013. However, they need to disclose that 2 million as a contingent liability in the notes to the financial statements. We look at information number 2. On 10 February 2014, it was announced that the company was raising 40 million by the issue of shares for cash. The issue took place on 1st March 2015 at the market share price. Again, it happens between the period of 31st December 2013 up to 12 March 2014. So, when there is an issuance of shares, this is also considered as a non-adjusting event. Alright, so the solution says that it's a non-adjusting event. We do not need to adjust the issuance of shares in the financial statements. However, we need to disclose it to the notes to the accounts. Number 3, a provision for depreciation on factory building was to be provided at 10% from its carrying value, 3 million. However, on 1st March 2014, the company realized that it has not provided the depreciation for the year ended 31st December 2013. So, now this is a case of errors. So, if you can recall, this is an adjusting event. Now, what Atlas need to do is they have to make appropriate adjustment to the financial statements, right? So, in this case, if you can see, they have forgotten to record the depreciation. So, we need to calculate the depreciation amount of 10% from the carrying value of 3 million. So, that is 300,000. So, we debit depreciation 300,000, credit provision for depreciation 300,000. So, we look at another illustration. The financial statements of Rintis Biru Berhad for the year ended 30th June 2015 is authorized for issue on 1st September 2015, and the following are the events after the reporting date. So, so the events after reporting date would be between 30th June 2015 up to 1st September 2015. Right, so any events that occur between those periods is considered as events after reporting date. Right, so now we're going to determine whether this transaction is an adjusting event or a non-adjusting event. Right, number 1, a purchase of goods dated 30th June 2015 amounting to 120,000 was recorded as sales in July 2015. So, this is related to inventory, right? Or a transaction that occur after reporting period, right? So, this is considered as an adjusting event, right? So, what we need to do is we are going to, they have mistakenly recorded a purchase of goods as sales. So, this is nothing to do with inventory, but it's something to do with errors, alright? So, what we need to do is we have to rectify this error by taking out the amount of 120,000 that has been charged as sales, and then creating an account to record the purchase of the goods. So, we debit purchase, okay, 120,000, and we credit sales 120,000. Okay. A major customer with a balance of 200,000 as at 30th June 2015 was declared bankrupt on 15 August 2015. Again, this is an adjusting event. It occurs between the period of 30th June 2015 up to 1st September. So, we need to adjust this because it is related to adjusting events, right? However, the company managed to get a payment from the customer amounting to 20,000 in July 2015, right? So, out of this 200,000, the company managed to get 20,000, meaning that 180,000 it will be considered as bad debts. So, in this case, we are going to recognize that 180,000 as bad debts. So, we are going to create an account of bad debts, and then we are going to reduce the amount of the customer. So it becomes debit bad debts expenses 180,000 and credit accounts receivable 180,000. Okay, again we go to our next illustration. Okay, Permula Berhad just closed its books on 31st December 2015 and the financial statements of the companies are authorized for issue on 1st May 2015. So any events that occur after 31st December 2015 up to 1st May 2015 is considered as events after reporting period. So what we need to know now is whether that event is a non-adjusting event or an adjusting event. Right? So if you look at number 1, on 20th February 2014, a fire broke out in one of the wings of the company's building. The loss was estimated amounted to 3.25 million. So in this case, this is related to fire. When it is related to a disaster or destruction, then this is considered as a non-adjusting event. So what the Permula needs to do is, they do not need to adjust the accounts in the financial statements, but they need to disclose this amount of 3.25 million in the notes to the accounts. Inventories costing 3 million as at 31st December 2014 was sold for 2.3 million on 12 March 2015. So in this case, the inventories which was recorded at 3 million at 31st December 2015 was sold at a value lower than its cost. So when the selling price is lower than the cost, then we need to adjust the financial statements to account for the reduction of the cost. Alright, so in this case, this is considered as an adjusting event. Permula Berhad should adjust the carrying amount of the inventories as at 31st December 2014 to 2.3 million, being the lower of cost or net realizable value. The loss of 700,000 is recognized in the current year expenses. Right. Number 3, on 1st April 2015, the company entered into a contract to purchase a piece of land for 10 million. Now this one is regarding a purchase of land of 10 million. Alright, so whether this is a adjusting or non-adjusting event. Now when it involves a purchase of land, entered into a contract of purchase of land, they have just only entered a contract. It has not been fully transacted yet. So this is considered as a non-adjusting event. Okay, as a non-adjusting event. So Permula Berhad do not need to account or to adjust the financial statements, but they need to disclose the 10 million acquisition of land as a significant event after reporting date in the notes to the financial statements. Okay. So we have gone through a few illustrations. So if you can recall back what we have learned, alright? So we have learned about what does it mean by events after reporting period. That is the date, the events that occur after the financial year end up to the date when the directors issued the financial statements and they have given the authorization for the financial statements to be issued. So events that occur between those period is considered as events after reporting period. And you can recall also that there are two types of events after reporting date, which one is non-adjusting events, the other one is adjusting events. So if it's related to adjusting events, meaning that we have to make the necessary changes to the financial statements, right, to account for the events that occur after the reporting date, right? And if it's a non-adjusting events, meaning that we do not need to adjust the figures in the financial statements. However, we do need to provide notes to the accounts to tell our shareholders that this transaction happened, right? But we do not need to adjust adjust these figures, these events, or take into account these events in the financial statements. So, okay. So with this, we have complete MFRS 110. So I hope you can go back and look through back all the illustration to provide a better understanding. And with that, Assalamualaikum.